Yo, what's up YouTube? Today I'm gonna teach y'all pretty much when to buy or when to sell in the market. So a lot of people have been asking like, what do I look for when I'm entering the market? So pretty sure I went over it, but I guess I'll go over it again in a little bit more detail. Try to explain it better. But hop on TradingView or anywhere you can view the charts, and let's go to futures. Futures at the NASDAQ, the main one we're trading. I'm gonna teach y'all something new today. It's called a SMT divergence. So basically, what it means is that so NQ, which is the NASDAQ, and the S&P 500, they mirror each other. So when you're looking at price, when something's not adding up, like let's say, I'm gonna try to find one real quick. I wasn't really prepared for this, but let's see if I can look at one real quick. Okay, right here. So you can see at this low at 415. Let me make sure it's correct. Yeah, so this low at 415, it swept it, and then on this one, it left it. So that would be a SMT. So basically, you just take here, you draw a line from here to here, and then divergence. So basically, when the market comes and you can see on ES that it came, swept this low, and then price went up to go sweep. I think it tapped off this Breakerbox, which is another term I'm teaching you all today, which would be where basically right next to a green candle, you got a red candle, and all you do is mark the top of that green candle over. And that's pretty much saying buyers right here got disrespected with this big red candle, so there's a lot of sellers right here. So you can see where price tapped that breaker, got sent down. You can use it as an inequality like a fair value gap or an inverse fair value gap, and price got sent down off that thing, and then we took out, I think, yeah, and we wanted to take out this level of liquidity down here, swept it perfectly, and then we bounced. And now what you should be seeing is basically, this is how you're going to know to buy or sell. Right here, you can see what the market's doing right now. Like this is right now. You have a inverse fair value gap, so where this candle comes down, the wick comes back up, it still leaves a big, huge part of this body, same with this candle. So now you draw a box, you draw it over. So now you just look, you sit here and you just wait for price to come into it. Alright? So as soon as price comes into it, you just want to see what it does. Once it closes above this 50% level of the box, you need to take buys. And you want to aim for your nearest level of liquidity, which would probably be this high right here, because price couldn't go any higher than that. So price had to come down here, sweep some more money to now go get the money up here, because that's the way the market's moving. It's either going to a high or low, or an inequality like a fair value gap or an inverse fair value gap. So now once it sweeps this high, which it just did, as you can tell, if you look right here, now that this fair value gap's already filled, you don't need to mark it out anymore. You can mark the next nearest inequality, which will be this fair value gap instead of an inverse fair value gap. So boom, we mark that, and now we just wait for price to come in here, wait for the 50% level. If it respects it, we're going up, probably higher to this high or this high, and if it disrespects it, we're probably going to go to this low or this low. I mean, it's pretty simple stuff, but you can tell what price is doing right now. This is coming inside of this inverse fair value gap, because it's searching for an inequality right now, I think. Just wait for price to develop. We still got 2 minutes on the candle. We'll see. Yeah, see? Tap that. It'll either tap this and go lower into this, or tap this, disrespect it, so that means close above the 50% level, and then we're going to take out these highs. But yeah, that's basically how to enter a trade. And then where y'all want to put your stop losses. So let's say price went above this inverse fair value gap. You saw that. You were like, oh damn, price just disrespected it. I'm gonna enter a trade. Where do I put my stop loss? Right, like 2 ticks below the box. Maybe like 4 or 5 ticks below. But just literally like right here. Just somewhere below the box. Because sometimes price will come here. It'll tap right on this box and bounce right back up. But as you can see, price is now disrespecting this. We just got to get a close. See how it tapped it? Like, if it disrespects all this, you can see how it tapped the top of that box perfectly and is getting disrespected because of the sellers. And we're probably going to go to a this low, this low, this low. I mean, you never really know. But you can kind of guess. And if you are right with futures on your guess, you get a pretty hefty chunk of change. No faking. Made like 5K today. So we up on like a 9-day win streak right now. So if you don't think you can make money consistently in the market, I don't really care. You're broke. You'll put the fries in the bag. I don't really care. But yeah, so that's a SMT divergence where on one chart it sweeps a high and on one chart it doesn't, which means one of them is the weaker pair, and so this one probably dropped to right here, and this one probably dropped way lower. Yeah, it dropped way lower. So you can use that to see how strong or weak one of the pairs is. And then you have your breaker, which would be, where did I find the breaker? Oh yeah, this little line right here at that green candle. So once you got a green candle and the red candle, just draw a little line on the top of it. Sometimes price will just shoot up straight through these, but more likely than not, you'll get a rejection off of it. Damn, excuse me. But yeah, that's fair value gaps, inverse fair value gaps, breaker boxes, and SMTs. And then all you're looking for with using those 4 things, you're just looking for price to come sweep. You see how price disrespected this. It's definitely going to come down here into what now is a fair value gap, and you can take a trade off this. The market runs 24/7. There's Asia session, London session, New York session. So I mean, you could wake up at like 3 in the morning and go take a trade and hop back into bed. You know, it's really whatever your schedule is. Like me, I wake up in the morning. It works out perfectly because I'm going to school. So as soon as I get in the classroom, I open my charts, I make a band or two, and then I'm done for the day, and I go do whatever I want, really, because you know, once you like start making money from this, you're your own boss. You're not working for anybody. You don't have anybody that can tell you what to do, and you know what you're doing, and you can literally print your own money. Like, people say it's illegal. Watch me. Anyways, like I said, price, once it disrespects its fair value or inverse fair value gap, it's gonna go down here, probably to this. I think it'll respect it, and then we'll go higher because you know Trump won the election. We're kind of we're definitely bullish. This whole day's just been up pretty much. Hella good shit. But yeah, that's it, YouTube. I'll see you on the next one. Dose.